Hey traders, in this strategy, we are trying to find moment when there is a sudden move to do stop loss hunting. We all know what stop loss hunting is. Basically, let's say if you take example, I am showing you TCS on a 30-minute time frame. You will notice that the stock was going up here and suddenly there was this big red candle. This acted more like a stop loss hunting move, and after that the stock keeps going up. In this kind of cases, we are aiming to make profit by taking a perfect entry. Whenever we see a sudden downward move like this, we can look for a reversal trade, meaning we can go for a buying trade. But how do you define this? I am using two indicators. The first is the moving average. The pink line is you see in the middle. Here is a 9 period moving average. The blue line are the Bollinger band. Now Bollinger band are levels where if the stock touches this point, there is a chance of a reversal. I am using a 2 standard deviation Bollinger band here. Let me quickly show you setting. Bollinger band with a 20 length and a 20 standard deviation setting, and for the moving average I am using the 9 period SMA. In this setup you will notice that most of the time the stock moves close to the SMA. Another thing to note is the difference between the Bollinger band and the SMA. When the stock is going up, the gap between the Bollinger band and the SMA on the is going up. The lower side is usually smaller while the upper side gap is larger. However, in this sudden move like this red candle, we see the stock touches the lower Bollinger band, and here the gap between the lower Bollinger band and the SMA is greater than or the upper side. This indicates a potential reversal. So the first condition will look for a candle touching the lower Bollinger band with a larger gap between the lower Bollinger band and the SMA than on the upper side. If this condition is met, we prepare for a buying trade, but we only enter once we see a green candle afterward. This green candle becomes our entry point. We set our stop loss at the low of the red candle, and we can set two targets. The first target is SMA middle line and the second at the upper Bollinger band. In this example, we made a good profit. Similarly, let me show you another example in TCS. Here you can see the same thing happened. The stock was going up smoothly, but suddenly there was a page down. If you check, the first condition is met. There is a larger gap between the lower Bollinger band and the SMA compared to the upper side. This signals that the stock might go up. We then wait for a strong green candle, which confirm our entry. This green candle is our buy signal with a stop loss at the low of the red candle, and again we can have two target, one at the SMA and the other at the upper Bollinger band. You can use this setup for both stock and indices. Since this is a reversal trade, the stop loss is generally small, but the target can be quite rewarding. If you found this strategy helpful, don't forget to like and subscribe.